Every revolution starts with vision. Behind Nvidia, AMD, and Google are not just companies that sell and distribute software. They changed how the world works. Jensen Huang pioneered a new way to process graphics, revolutionizing both animation and gaming industry. Jerry Sanders proved that the processors could be optimized, so he challenged company titans, maintaining quality. And Larry Page and Sergey Brin entered an emerging market and developed the first tech giant of the 21st century. In some countries, Google means internet. Those sparks lit a global transformation, one shaping economies, governments, and power itself. This is their financial story. The artificial boom isn't happening in isolation. It's running on infrastructure, platforms, and chips built over decades. Three companies stand at the center of this shift: Google, the platform that organizes the world's information; Nvidia, building the hardware that trains these artificial intelligence brains; and AMD, the one fighting to stay in the race. They didn't appear overnight. Each one started with a single, bold idea and turned it into a business worth 10 or even hundreds of billions of dollars. Let's go back to where it all began. It began when two Stanford students built a search engine, not to sell ads, but to organize the world's information. So in 1998, Google is founded. Then came a rapid chain of important events. 2004, Gmail dominates the email market. 2005, Google Maps is launched. And 2006, YouTube is bought for $1.65 billion, the first video streaming platform. Google quietly became the base of the internet. Today, with nearly 90% of global search traffic, it's hard to go through a single day without touching the Google ecosystem. Android in your pocket, YouTube on your screen, Chrome on your browser, Maps within your home. And behind that ecosystem lies a massive economic engine. In 2024, Google's parent company Alphabet made $350 billion in revenue. 198 billion came from search ads, 36 billion from YouTube, 43 billion from cloud, and 40 billion from subscriptions and devices. But this power comes at a cost. Amnesty International has called Google business model built on tracking, profiling, and ad targeting. Opting out, nearly impossible. In 1969, Jerry Sanders left Fairchild with one goal: make computing faster, cheaper, and open to everyone. That goal became AMD. In the 1970s, they made their first chips. In 1999, they shocked the world with Athlon, the first 1 GHz processor, proving they could compete with Intel. In 2003, AMD 64 architecture was announced, setting a new industry standard for 64-bit computing. In 2006, AMD bought ATI Technologies, launching the company into graphics card market against Nvidia, but nothing was easy. Fierce competition and financial trouble nearly crushed the company. Fast forward to first quarter of 2025, revenue hit $7.4 billion. Data center segment was $3.7 billion. Client and gaming segments brought in $2.9 billion. And the embedded system segment added $823 million. Every big wave starts with a single bold idea. For Nvidia, that idea began in 1993. Jensen Huang, Chris Malachowski, and Curtis Priem believed graphics could do more than make games look good. They could change the way computers work. From early chips like the NV1 to the GeForce 256, Nvidia built a name in graphics. The real breakthrough came in 2006 when it launched CUDA, a tool that let GPUs handle much more than visuals. Suddenly, the same chips used for games were now used for artificial intelligence models, scientific research, and data centers. From then on, Nvidia stopped being just a gaming company. It became a key player in the future of computing. In the 2010s, Nvidia went all in on AI. Tesla and DGX Systems brought its chips to data centers. Tensor cores made deep learning faster, and new platforms like Omniverse and Drive took its stage into robotics, digital twins, and self driving cars. Nvidia's core business revolves around computing power. Most of its revenue now comes from its compute and networking segment, the chips and systems that run the artificial intelligence. The rest comes from graphics, its original gaming line. In short, Nvidia builds the hardware that powers AI, data centers, and high end graphics worldwide. It went from a small graphics shop to the core supplier of the artificial intelligence boom. Now, before going deep into the financials of these companies, Here goes an explanation of the measures that we pretend to analyze. Revenue, the total money a company earns from sales, is the top line that shows how big the business really is. Gross profit, what's left after production costs. Operating expenses, the costs of running the company, salaries, research and development, marketing and administration costs. Operating income, earnings before interest and taxes. Net income, the final profit after everything, taxes, interest, and one-off items, is the true bottom line. EBITDA, earnings before interest, taxes, depreciation, and amortization. Net profit margin, how much of each dollar in sales becomes profit. Return on equity, how efficiently the company turns shareholders' money into profit. Current ratio, ratio that shows how good can it cover short-term debt. Net cash, cash minus debt. Free cash flow, real cash left after running and investing in the business. If it's negative, it might just mean heavy investment for the future. So now let's put the theory into practice. Here's how Google, AMD, and Nvidia's numbers changed over the past 6 years, from the first quarter of 2019 to the second quarter of 2025. Google's revenue tripled, from 36 to 96 billion. AMD grows from 1 to 7.7 billion, and Nvidia exploded from 2 to nearly 47 billion. Gross profit more than doubled for Google and AMD, while Nvidia went from 1.3 to 33.8 billion, showing a massive value creation. Nvidia's operating income went from zero point 0.3 to 28 billion. Google rose from 8 to 31 billion, and AMD remained in negative territory. Operating costs skyrocketed. Google went from minus 12 to minus 26 billion. Nvidia from minus zero point 0.9 to minus 5.4, and AMD went down to minus 3.2 billion. Net earnings climbed sharply. Google went from 6.6 to 28 billion, Nvidia from zero point 0.4 to 26 billion, while AMD improved from 16 million to 872 million. EBITDA went upwards. Google achieved 36 billion, AMD 0.6, and Nvidia soared to 29 billion. Profit margins widened. Google went from 18 to 29%, AMD from 1 to 11%, and Nvidia jumped to an impressive 57%. Returns to shareholders doubled for Google, stayed flat for AMD, and climbed for Nvidia from 4 to 26%. Google current ratio normalized from 396 to 190%. AMD stays healthy around 200 and 250, and Nvidia remains strong with 421%. Cash flow stays positive. Google accumulated up to 9 billion, Nvidia jumps to 21 billion, while AMD's situation has worsened. And lastly, net cash. Google and Nvidia turned negative on last quarter, with minus 2.6 and minus 3.6 billion, reflecting big investments in artificial intelligence, and the same goes for AMD, with minus 1.6 billion. The question is who has a better position currently? Nvidia leads on performance and margins, Google leads on resilience and cash, and AMD is closing the gap, but its performance will decide how far. The artificial intelligence race isn't about products, it's about power. Google owns the data, Nvidia makes the chips that think, AMD refuses to fall behind. But every leadership is temporary. Any policy, energy, and innovation change can flip the situation overnight. That's today's financial story of Google, Nvidia, and AMD, the three technological giants. By the time you watch this, new quarterly results might already be out. And for those who desire a more in depth analysis, check the interactive dashboard link in the description. Thanks for watching. See you in the next one.